you're still tuning into Halftime Report on CNBC TV 18. Well, markets are steady at this point in time, but a lot of stocks which are moving around in trade. So let's talk about them. Bharti Airtel is surging in trade as the company has introduced new, cheaper family plan to counter Jio postpaid plans. Reema Tendulkar is joining us with more details on this one. Reema?
Thanks so much for that. So Bharti has introduced a new family plan for 599 rupees per month, where along with one SIM, you get an additional SIM. So basically, if you are a couple and you need 2 SIM cards, then this is an attractive plan for you because it costs you 599 rupees postpaid plan. Earlier, Bharti didn't have such an option. The earlier family plan started with 4 SIM cards. And it was priced at 999. So higher price, but it gave you 4 SIM cards. But what if you didn't need those 4 SIM cards? Then Bharti did not have a plan available for you. This move by Bharti Airtel follows Reliance Jio, who last week had introduced some more family plans, priced them attractively, gave a lot of combination in terms of without OTT top-ups or with OTT connections. So Bharti Airtel is trying to counter that and make sure that they're also present in all the segments and at the price points available in the family space. Bharti has also introduced new, cheaper Airtel Black variants. Airtel Black variants are basically not just postpaid. In that, you've got DTH as well as fixed broadband. So it's a whole house connection that you get. And here as well, Bharti Airtel has introduced cheaper plans which are priced at 799 and 999. It's basically Bharti Airtel trying to be aggressive, stay aggressive in the postpaid plan, make sure that they continue to get subscribers and try and perhaps convert some of the prepaid subscribers into postpaid as well and counter Reliance Jio's offering. Back to you.
All right, thanks a lot for that, Reema. So that's about Bharti Airtel, up around 1.5%. But the other stock which is surging in trade today is HDFC AMC. After a large trade that took place, Vivek joins in with the details. Vivek, GQG exits.
Well, absolutely right. So in yesterday's trading session, over 2.2% of the total equity changed hands via a block deal. The likely seller, as per even the exchange notifications, GQG partner seems to have made a complete exit of their holding. So that's one particular overhang that's gone from the company. And even more interestingly, or in a more positive development, it's a single buyer that's picked up the entire chunk. That is SBI Mutual Fund. Now, along with that, there are a couple of important triggers that are worth highlighting as far as HDFC AMC is concerned, given the fact that this continues to remain a bit of an uncertainty. So Aberdeen Investment Management, in an exchange notification dated December 6, 2022, and remember, they hold almost 10.21% stake in the company. They have already gone ahead and taken a clearance for selling an entire 9.9% stake in the company to one single entity. So that continues to remain one particular development that we need to watch as far as HDFC AMC is concerned. Post which, according to analysts, HDFC AMC that was deleted from MSCI index will make a re-entry. So all of these triggers are something that, analysts expect to play out in the coming few months.
Okay, thank you, Vivek, for that. So HDFC AMC is surging in trade today. The other stock that I am tracking today is Phoenix Mills. It is in focus, trading in the green, up around 2.5%. This is after Motilal Oswal Financial Services has initiated a coverage on the stock. They say as of March, Phoenix, of course, we all know the company as a mall operator. It has 11 operational malls with leasable area of 9 million square feet, and they are expanding as well. So they recently bought land in Surat. This is for developing a 1 million square feet mall by FY27. And with this expansion, according to Motilal, the company will have presence in many of the cities. It will be 6 out of the top 8 cities and 3 two-tier cities as well. So they are going on an expansion spree right now. The company has reported a healthy pre-leasing of 90% of its malls already, and rental income, according to Motilal Oswal, should increase by 32% in terms of a CAGR over FY23, FY25 to 2,200 crore rupees. In terms of their retail and office assets, they are valuing it at a cap rate of 7 to 9%. They have hotel assets as well, something like a St. Regis in Mumbai. Those are valued at 15 to 17.5 times September 24 EBITDA. So they are quite bullish on the rentals, and both from their commercial mall and the rentals from their hotel property as well. Company has a long-term vision to add 1 million square feet of retail asset every year. So their expansion plans is something which will drive growth for the company, and that's why Motilal Oswal has a target price of 2,000. That's like a big target from the current levels. 1321 is the current market price. They also have a buy rating on the stock. Manglam.
All right, so that's about Phoenix Mills. The stock up around 2%. Those who live in Mumbai will obviously know about some of their assets, but increasingly they are expanding their presence too. Take a short break, come back. We talk about the market technicals with Sachidanand Uttekar.